First of all, definitely a big factor, and we won't have to wait all the way to fall because already we seem to have our candidates. Those who believe that Trump has the upper hand believe that the FX markets should get affected the most, especially the dollar. Why? Because in the second term, previous president may be just as or even more aggressive on tariffs and trade barriers. That should definitely affect the likes of Euro, what he does towards Europe, of course Mexico, and China. So when former president did very well in the first primary, there was a big dollar move. This became quickly the narrative. Now we're calming down a bit because let's see what President Biden will do. Some still believe that President Biden will be able to defend his seat. So depending on that, if you're a big believer that Trump should go and win it, or if you believe that he will continue to do well in the polls and create a scare on the tariff front, then maybe you should lean more towards dollar buying against the yen and certainly against Mexico, CNH, and Euro.
Now the dollar has been doing very well lately. Will this momentum continue throughout the year? And what are the other good alternatives to the USD?
That's our house goal. My partner in success, George Servalos, that's what he's arguing for. And it makes sense, right, for the reasons that I summarized. Not only Trump, we talked about that, but also more hawkish Fed, or market coming back to more the Fed view from 6-7 cuts to 3 cuts. Also the terminal rate. At the end of the day, next move, with all due respect to my previous Professor Larry Summers, next move is most probably a cut, not a hike, but the terminal rate is key. If ECB ends up cutting more than Fed, then of course that's a dollar-friendly phenomenon. On the other side, what's the biggest ally of low dollar volatility? Soft dollar, carry, right? Emerging markets you asked about. So all these trades like Mexico yen, BRL yen to continue to do well. Yet again, equities. In a world is Magnificent 7, Magnificent 5, whatever you want to call it. Similarly, 6-7 topped European stocks in eStocks 100. If they continue to carry us in that type of world, it's if we keep avoiding risk off, if risk continues to run away from people, continue to do well, in that type of world, it's really hard for me to see euro dollar at 105, 104, because what is there to be scared of? So that's the one you should make the two choices on. If you believe in more and more equity rally, first 5,500 on S&P, then carry and soft dollar may continue to deliver for you. If you're fearful of this correction, if you believe that previous President Trump will do well in the polls, then yes, you should go with the majority and buy dollars.
Monetary policies, they are at an inflection point. Each central bank has its own reasons, but there is a small element of correlation in terms of momentum. What's your view on the divergence in timing, looking at Bank of England, ECB, and Bank of Japan? Who is starting first, and how would you position yourself currency-wise?
My excellent chief UK economist, Sanjay Raja, started the year with 3 Bank of England cuts. I think he will continue to be right. The thing is, everybody else started converging to him, both on the Fed side and ECB side. The big, part of the root of your question, the big question mark is who's going to go first. And I agree with the consensus or the generosity approach that it's tough to decouple from Fed. So ECB usually would like to wait for Fed, but this time around, despite what Governor Halsman said, they may end up actually cutting right before Fed. Why? Because the June meeting of ECB is 6 days before Fed's meeting, June 12th. So everything else being equal, if they agree with the market, converge on these 3 cuts starting in June, then ECB will start first, and if anything, cut one week before the Fed. But back to my terminal rates point, who's going to end up cutting more? At the moment, market is probably leaning more towards ECB will end up cutting more. If you believe that, then yeah, you put on the consensus rates, which are you would be more long European rates, more long European bonds, as opposed to US. The problem, Lima, when everybody believes and goes to the same side of the ship, what happens? Usually we get unbalanced. A lot of people bet for this long European rates versus US. So at the moment, it's a bit of a pain trade. It's not exactly working.
Global macro now. In your view, which markets are the bright spot for investors this year?
I'll go with the winners. Japanese equities, for a reason. They waited for a long time. Finally, both for their tech developments and because of the expectation of what Bank of Japan will be doing, they are on a move. I think they will continue to be winners. And India, wherever I go around the world doing my roundtables, right? Whether it's Europe, US, our region, Middle East, India keeps being mentioned. Friendly shoring, getting closer with US and West. So I think Nifty also will continue to deliver. On the other side of your question, pessimism for the moment, consensus falls on Europe and China.
China had a very bumpy road for several reasons, mainly structural ones. What is your view on China and your best bets and expectations in terms of FX and stocks? Do you believe in the narrative to own China on the long run?
As vice chair of Global Macro, my approach is both to give you the consensus view and then also share my view, right? Consensus view, bearishness. Dollar CNH higher, especially long date options people are betting on, and a lot of pessimism on China stocks. This career taught me to be wary whenever people have that much of a herd thinking almost. I think both China and Europe may surprise on the positive side on the second half of the year. On China, my reasoning for that is maybe you won't get this one scoop saves all big intervention that West is craving for, but little by spoon by spoon, they are giving the sport measures. Positioning is in your favor. Everybody is bared up, and also I think there will be government interventions and government support as well. These factors combined, I can go against the consensus on China equities. Maybe not necessarily right away. By the way, the last few days they've been doing quite all right. But in the second half of the year, I think China will surprise the pessimists.